Okay, in this video, I'm going to teach you how to trade the best order blocks every single time. And there's only two things you need for a reliable order block. The first is a liquidity sweep, and the second is a fair value gap. That's all we need for a reliable, high probability order block. And in this video, I'm going to show you what that is and how you can make money using order block. Okay, so what is an order block actually? An order block is simply the last up close candle before the down move when we're bearish, right? So all it is this candle right here. So I'm going to mark this out. This is what an order block is. It's the last up close candle before the down move when we're bearish, and when you're bullish, it's the last down close candle before the up move, right? So this right here, this little candle here, would be our bullish order block. Now that alone is not enough to make you money. You're not going to make money just by knowing that, because that's not enough for order block. There's two more things you need to look for. But just look at this, right? This was a so-called bullish order block that failed, and it failed for two reasons. The first is that we didn't have a liquidity sweep. So what actually is a liquidity sweep? Because this is the most misunderstood, but probably the second most important thing after liquidity itself is a liquidity sweep. Now, a liquidity sweep is a fake move designed to take out stop loss orders, right? That's all it is. Let me just zoom out and make this a bit more clear. So at this high here, lots of people, right, as the S&P was getting shorted, they would have sold, and they would have put their stop loss here, right? They would have put their stop loss here. They thought, you know what, price has gone down massively. Very unlikely that price will go all the way up. Now, we low, and if you know about liquidity, especially on the higher time frame, the S&P is bullish, right? It's bullish overall. So smart money are going to force price upwards, but we don't need to know that. All we do need to know is that there's lots of liquidity at this high. So what price always does, and you will always have this, is it comes up just to here, just to take out anyone whose stop loss orders were here, right? Anyone who had their stop loss orders here, price comes up, it pokes them out, then it goes in the other direction. That right there is a liquidity sweep, and any retracement after that is such a high probability entry. It's insane. Now, for an order block, right, the first thing we need to look for is a liquidity sweep, right? It's the first thing that we've got. The second, and I always say this to my students, is let me just remove this gap here. We want to look for a fair value gap, right? Now, fair value gap, simply the gap between this candle here and this candle here. So I'm going to mark it out just to make it clear and then remove it. So we're not going to enter on the fair value gap. We don't care about that. But when you've got an order block that's also formed after a liquidity sweep and has a fair value gap attached to it, let me tell you something. That is literally the highest probability order block and probably one of the highest probability entries in all of trading, right? That's such a good high probability, easy entry pattern. And yeah, all you're going to do, right? All you're going to do is once you're at the fair value gap, and we don't need to, we don't have to care about the size of the fair value gap, anything like that. But all we need to see is a fair value gap and a liquidity sweep. What you're going to do is literally enter on the order block. Now, this is really important. This is something for your notes. The body of the order block is smart money, right? The body of the order block is smart money that has billions and billions of dollars. The wicks, let me just see this. The wicks, see how it like pokes up and down. That's retail, randomly buying and selling for no reason. The body, though, that is smart money. So there's essentially two things you can do with an order block. You can, if you really wanted to, you can enter on the body of the order block. Now, I personally don't do this. I just, I enter the whole order block, unless it's got really huge wick, right? Maybe if it was a candle like this, then maybe not, but I just enter at the order block like this, right? Like that. And I put my stop loss. And this is so important, right? Your stop loss always has to be at the liquidity sweep high, right? Right. It always has to be at this liquidity sweep high. I see so many people, they'll get everything right, but they'll put their stop loss here, right? At the high of the body of the order block, right? I know you get away with it this time, but I'm telling you, more often than not, what's going to happen is you're going to get everything right, price going to come up, it's going to poke out your stop loss and then quickly go in the other direction. And that's going to be so frustrating. So please, don't do that. Always have your stop loss at the liquidity sweep high, because that right there is the safest and best place for your stop loss. Now, for take profit, you literally can target a 2-to-1 or a 3-to-1, right? For me, I always target a 3 risk to reward ratio like that. Nice and easy. And yeah, that's literally all you need for a high probability order block. Liquidity sweep, fair value gap, entry. That easy, that simple. And don't try and finesse your entry. I always say this, don't try and finesse your entry. If you really wanted to, you could target liquidity here. So if you really wanted to, this could be your long-term target, 4.3 R. But you know what? You don't need that. You need a 2 or 3 risk reward ratio and consistency. Now, that was a bearish example. Now let me go give you a bullish example. Okay, so here we are on the next example. Now, can you guys see where the liquidity sweep is? Right, just think for a few seconds. Where is the liquidity sweep? Where is the fake move designed to take out stop loss orders before price moves in the opposite direction, right? And I hope it's or with experience it will get clear. This right here is our liquidity sweep, right? Price comes down, it wicks down just to take out stop loss orders here, right? The only reason price comes down is to take out these stop loss orders here. It moves up aggressively, it leaves a fair value gap, and it retraces to the order block, and then we want to ride price up. That right there, easiest entry there pattern possible. You will also notice you can get an optimal trade entry too, but we're not talking about that. This video is purely for order blocks. I know a lot of you love order blocks, and I love order blocks too, bro. I love trading too, but let me mark this out for you. This is our liquidity sweep. We always wait for liquidity sweep. Doesn't matter what entry pattern you're using, optimal trade entry, fair value gap, VWAP, you need to wait for a liquidity sweep, because if you don't wait for a liquidity sweep, you're going to get swept. And what I mean by that, for those who get confused, is let's say you're bullish on the higher time frames, because most people understand liquidity on the higher time frames. They can get the daily bias right. They know, overall in the S&P we're bullish. But what happens is, they try and buy any sort of retracement here because there's a fair value gap, order block, VWAP, indicator. And what happens is price comes down, it takes out their stop loss and instantly goes to take profit. And this isn't just theory. This used to happen to me all the time. I literally blew my top sub account on the way to work, on the train, and I was so fucking angry at myself. Because this used to happen all the time. Every single time price would hit my stop loss, just like it does with this wick, right? My stop loss would be somewhere here, it would tap my stop, price would come down, it would literally take out my stop loss and then quickly move straight to my take profit. And it's the most annoying and frustrating thing in the world. It took me years of trading failure to understand that. And for those who are asking, ICT didn't, I learned from ICT. ICT did not teach me liquidity sweep, right? At least not properly, because he doesn't mention it too much. I learned that on my own, right? He had lots of trial and error to always wait for liquidity sweep. So I'm trying to save you guys literally years of pain, right? Years of pain, because those are some dark times. So make sure you always wait for our liquidity sweep, right? Liquidity sweep. This is what we want to wait for. Liquidity sweep. The fake move designed to take our stop loss orders, because this will always happen. Let's just make this a bit smaller, like that, right? So here's our liquidity sweep. Now, number two, what's the next thing we look for once we've got our liquidity sweep for an order block? What's the second thing I told you to wait for? A fair value gap, right? Because the fair value gap but for those who are wondering why do we wait for a fair value gap? Essentially showing you that price quickly had to move away, right? You see this? You see all this consolidation here? Let's mark this out. See all this consolidation here, right? This is choppy, low probability price action. You also notice how there's no fair value gaps here, right? That's how you know that price action is quite choppy, the lack of fair value gap. And the price, has the fake move, liquidity, aggressively moves off. Now, aggressively moves off, especially for like a tweet or something. I will just tell you that. That's very vague, right? Most people don't understand that. Now, another way of saying aggressively moves off would mean it leaves fair value gap, right? And then price comes down, it enters the fair value gap and the order block, and then we ride price up. So what we're going to do is let's just clean this up. Right, we've got our fair value gap, and let me just mark it out for you, because I know some of you will be struggle with it. So here's your fair value gap, right? This is the fair value gap. Now, we don't want to enter on the fair value gap unless you're a fair value gap trader. But for me, I always like order blocks optimal trade entry. What we're going to do is we're going to enter it on the order block like this. Stop loss always at the liquidity sweep low. Always at the low. Now, it is much better to have a wider, safer stop loss and a lower risk to reward ratio and a higher win rate than to have a tiny win rate of 20% and to aim for a 10 risk to reward ratio. I'm telling you that because most people don't have the psychology to lose 10 trades in a row and be sane about it, right? So always have the highest probability trades, and then or take profit. If you want a quick scalp, let's say you're trading indices, quick scalp 2-to-1, easy. I mean, that's what, 15 minutes, and you can make 3K or whatever your take profit is. And if you're a bit more of a day trader, because this right here is the PM session. And by the way, this works on all markets. People keep asking me this. It works on any financial market that has candlesticks, and that literally that's on trading view. This will work for even the Turkish stock market. For whoever was asking me that, it works on that too. But if you want to aim for free risk to reward ratio like that, and literally the final hour of indices, and there's always like a pump up or a pump down, and because people need to get out of their positions or in and out of their position, and you hit your free risk to reward ratio just like that. Nice, easy, high probability sales, consistent sales, which are so good. And if you're struggling with daily bias, if you're struggling about the higher time frame, all that sort of stuff, if you see this entry pattern, where you put your liquidity sweep, you've got a fair value gap, and price retraces to an order block, safe bet, very safe trade there. And yeah, I hope that made sense. If not, please do just message me in the comments. I respond to every single comment because it's still a fairly small channel as I'm recording it. But yeah, make sure you use that. And I've also made a full free trading course, 3.5 hours long. It gives you everything you need to know: liquidity sweep, trading psychology, how to fix your psychology, and all the different sessions, swing trading, everything, top-down analysis, everything you could ever need to know is all in that video. It's literally like my life's work, right? Or all my trading knowledge put into one massive video. So go check that out. It should be in the pinned comment down below, and it should be on screen too. Other than that, before you go, make sure you like and subscribe, and I'll see you guys next video. Peace.